Ladies and gentlemen, we have just got the scariest market data in the past 3 decades. When I woke up this morning and saw this data, I nearly fell off my chair. And this one piece of powerful data shows that the Federal Reserve has made a massive policy mistake. And in this video, I'm going to go over how this will lead to the housing market going down and the stock market going down. And we all need to pay attention right now because things are going from bad to worse. Okay, everybody, let's not waste any time. Let's get straight into it. Okay, so what is this data that I'm talking about, everyone? That is the latest inflation data. Now, before you go, oh, I've heard about inflation, I'm sick of hearing about inflation, inflation's boring. People, you have to understand what is going on right now. And I'm sure most of my viewers do, but unfortunately, many of the average Joe and James have. Look at this, everyone. US consumer prices jumped 6.2% in October. This is the biggest inflation surge in more than 30 years. Now, you may think 6.2%, it sounds bad, but people, I don't think you understand how bad it really is. Because the latest CPI, the latest inflation data came out much higher than expected. And you know what the central banks have been saying? Don't worry, it's transitory. Well, look at this chart. I'll bring up a chart here of the month-over-month inflation data. We can see here it peaked out in June when, again, they were saying that inflation is transitory, it's all going away, and it slowly kind of crept down there. But look, we are now heading on another uptrend, and in October, it came in at 0.9% month over month. So do you know what that is annualized? 10.8%. But guess what? It compounds every month. So it'll go up 0.9% this month, go up 0.9% again next month. But remember, it's now compounding at a higher rate. And what really saddens me and gets me upset and angry is people don't understand how this is literally destroying their lives. The Federal Reserve and all the economists and the government are telling us that inflation is good, but people, inflation is theft, inflation is a hidden tax, and inflation is destroying your purchasing power, but it's much more than that. Think of money and inflation as your time. For example, you've been working hard the past year to try to get ahead, to provide for your family, to put food on the table. Maybe you're putting money away for retirement to hopefully retire one day and enjoy your golden years. But what they're doing on purpose is creating high inflation, and with inflation running at 7 to 10% annualized, and remember the real numbers are at least 15%. I can bring up a chart of shadow stats because they changed the data in the 80s and the 90s, and that's why it seemed like that inflation hasn't gone up much in the past 30 years, but we all know the cost of living over the past 30 years has skyrocketed. But going back to what I was talking about, it is stealing your time, because every year that inflation is over 7%, that's another year you're going to have to work to fund your retirement. And guess what? With inflation running at this rate, you are never going to retire. Unless you have a very high income or you have a multi-million-dollar portfolio, you will never get ahead with this current inflation rate. But they're trying to tell you it's okay. You'll get a pay rise. But we've got the data. Wages aren't keeping up with inflation. And even, for example, if inflation went up 5%, your wage went up 5%, well, you're going nowhere. But what happens? You pay higher taxes, your income tax bracket goes up, and also the costs or the taxes you pay on goods go up as well, which helps fund the government's skyrocketing debt, because again, this is the system they use to scam and rob the poor and the middle class. And really, this latest inflation is going to destroy whoever's left in the middle class. And also something we've been talking about, the Federal Reserve at the start of this year, he was saying that don't worry, economics 101, it's all changed. The economy's changed. Money printing doesn't lead to inflation anymore, which is a complete lie. I'll bring up a chart here of the M2 money supply growth and the CPI. You can see it's 100% correlated. And I'll play a clip here of his interview when he was asked if all this money printing will lead to higher inflation.
But as a store of value, the US dollar really, is it diluted as a store of value when M2 goes up by more than 25% in 1 year? Does the printing of more US dollars somehow diminish the value of the dollars that others hold?
There was a time when monetary aggregates were important determinants of inflation. And that has not been the case for a long time. So you'll see if you look back, the correlation between movements in different aggregates, you mentioned M2, and inflation is just very, very low. And you see that now where inflation is at 1.4% for this year. Inflation dynamics evolve over time, but they don't tend to change overnight. And so we've had, and I remember well, I was in college during the 1970s. I remember well high inflation and this feeling of powerlessness on the part of anyone to deal with it until finally Paul Volcker did exactly that. And we've been in a low inflation, disinflationary mode ever since.
Well, of course, that video didn't age well. And really, they're trying to tell us that 1 plus 1 equals 0. They're trying to tell us that more government spending will actually reduce inflation. And I don't know how people are buying this at all. But let's have a look at what prices are rising the most, and I'll get into in just a moment how this is going to have huge consequences for the housing market and the stock market. The Consumer Price Index, which is a basket of products ranging from gasoline, healthcare to groceries and rents, rose 6.2% from a year ago, the most since December 1990. That compared with the estimate of 5.9%. And like I said, on a monthly basis, this was a huge increase in the CPI of 0.9% compared with the estimate of just 0.6%. So that's 50% higher than the estimate. But look at what's happening to fuel prices, and I'm definitely feeling this at the pump. It cost over $100 for me to fill up my car the other day, so I'm sure all of you are feeling this as well. Fuel prices soared 12.3% for the month, part of a 59.1% increase over the past year. That's right, fuel prices have gone up nearly 60% in just a year, and they're telling us, there's just a little bit of inflation, just suck it up. Energy prices also rose a massive 4.8% in October alone and are up 30% for a 12-month period. Used vehicles, we're continuing to see this, that used cars are going up through the roof because of supply chain issues. And something I think people are not really talking about, and this is quite sad, is I'm sure there's many people that can't afford this record inflation. They can't afford their rents going up through the roof. They can't afford these grocery bills. So what are they going to have to do? They're going to have to start living in their cars. This is the impact, the real world impact this inflation is having, and it has to stop, because what will happen if it keeps going like this, we're going to see the biggest wealth gap in history, and then what that is going to lead to is huge social unrest. So while it's good to have a little bit of inflation, and it's good to have a stock market that goes up at 5 to 10% annualized, not this crazy 50% annualized, it's a fine balance, and it's a fine balancing act of wealth and equality. Because if you get all the wealth concentrated to just a few, well then the 99% are going to come for the few. Used vehicle prices again were a big contributor, rising 2.5% on the month and are up 26.4% for the year. And new vehicles prices are up 1.4% and 9.8% respectively. But again, something very worrying, and I'm seeing this when I do my grocery trips. I wonder if you're seeing this as well. Food prices also showed a sizable bounce, up 0.9% and are up 5.3% respectively. Within the food category, meat, poultry, fish, and eggs collectively rose 1.7% for the month and 11.9% over a year. So that's right, nearly 12% over a year. What this is going to lead to is simply families aren't going to be able to afford to eat meat, fish, poultry products. They're pretty much going to just be living on cereal and rice if inflation keeps going on like this. So this is why I can't stress enough, this is very important. Unfortunately, the average Joe and Jane doesn't understand this, but my viewers, I know you do understand this, so please educate your families on what these central banks are doing, because it's not just in the US. All central banks around the world are telling us that inflation is good, but they're telling us to suck it up. Meanwhile, they're profiting massively with their multi-million-dollar portfolios and also insider trading. And again, like I showed you, they say that this is good because you'll get a pay rise. Well, no. This is the data it says here. In a separate report, the Labor Department said real wages after inflation fell 0.5% from September to October, the product of a 0.4% increase in the average hourly earnings that was more than the offset by the CPI surge. So again, people, I tell you, this whole thing where they're saying, look, we're doing this for jobs. We just want to help the little guy. We want, everyone to have a job. Well, what's the point of, having a job that pays 20 bucks an hour when your fuel prices are $10 and a loaf of bread is $10? And the biggest scam, the biggest lie I see in the CPI is how they calculate shelter costs. This is a complete joke. Look at this. Shelter costs, which make up 1/3 of the CPI computation, increased 0.5% for the month and are now up 3.5% on a year-over-year basis. That's a complete joke. In many areas, rents are up 10, 20, even 30% in Phoenix and Las Vegas. And also in many areas, house prices have gone up 10 to 15%. So there's no way shelter costs are only up 3.5%. And this is hiding a huge amount of inflation. And this is why they don't teach this in school, people. They don't want you to know the robbery they're doing. But okay, what you want to know, how is this going to affect the housing market and the stock market? The reason why the market hasn't crashed yet, and the reason why I guess you could say I was wrong, is because I thought when this crazy inflation would come, that the Federal Reserve would do their job. Simple economics 101, if inflation's 3 times the mandate of the central bank, they should tighten monetary policy and lift interest rates. That's the facts, but we don't live in facts, and we don't live in free markets, and we don't live with the markets that have fundamentals. But now the problem is too big for them to ignore. So how this could crash the stock market and housing market is they're going to have to completely taper and shut all the asset purchases. And what they're even going to have to do, because it's quite clear right now, they've lost our control of inflation and we are in stagflation. It's not a debate anymore. They could have to start selling off their asset purchases, and they're going to have to start lifting interest rates. But what have we seen, people? There's been people taking out record amounts of home equity. There's been people taking margin debt at record levels. Imagine if inflation doesn't go away. What happens if we have a time of the 70s where they have to jack interest rates up to 15%? Well, I doubt it'll go that high, but it's not going to even take that. If interest rates just go up 3 to 5%, what we're going to see is people that FOMO'd into the housing market like Zillow and paid sky high levels, and they bought the house that they couldn't afford in order to flip it or sell it for a year or two later for a profit, they're going to go bust. The stock market euphoria, people that made heaps of money and then they said, I could make even more money if I refinance my house and put it into investments, or if I take on margin debt. Well, they're not going to be able to afford the high interest rate costs, and they're going to have to sell off their margin. But you know who's going to be the biggest defaulter? The US government. That's right, they could potentially default because the debt is massive, $28 trillion. And the only reason they've been able to take on more and more debt is because interest rates have gone lower and lower and lower. But what happens if interest rates will go up 4%? Well, they won't be able to afford to pay the interest bill. With interest rates rising, people defaulting on their mortgages, people defaulting on their margin debt, and the biggest defaulter of all, the US government defaulting, this will lead to the biggest housing and stock market crash since the Great Depression. And also what I think this is going to lead to is a great monetary reset, aka the Great Reset. And we're going to see these central bank digital currencies come out. We're going to see some new financial system, because the current one, all fiat-based systems, they all have 100% failure rate. Every currency, every financial system that's been manipulated to benefit the few, they've all failed. But guess what? The elites, they're using this fake fiat currencies to steal your time, steal your labor, and steal your real hard assets. So everyone, I think we're at the end of this monetary cycle, and the reason why the markets have seemed like they only go up after every recession is because they've been able to drop interest rates lower and lower, print more money, but obviously that doesn't work anymore. They can't print more money to avoid this. They're going to have to face the music. They're going to have to let the free markets do its thing, let interest rates rise, and let the market find out what fair value is without the Federal Reserve pumping prices up. But everyone, what do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.